Welcome to today's Daily Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 29th of April. There's been a fairly positive outlook coming into the European session, and that's built fairly nicely actually today. We saw yesterday the S&P 500 bull failure actually on the breakout above 2880 fell into the close actually, and it was a pretty disappointing end to the session. It was a bit of a tech-driven sell-off, but after hours we had decent earnings from, or better than expected earnings from Google, which helped Google to recover, and subsequently we've seen futures which have rebounded today. So we're still looking at the potential for this breakout and risk positive edging through markets really. You can see that through equities in Europe. We've got the dollar, which is under a little bit of corrective pressure, just falling back again after an intraday rebound yesterday. It's fallen away this morning. Treasury yields a little bit mixed, really, just edging slightly lower. It's a bit of a tinge, actually, of some areas of the market which are slightly less positive. Certainly the yen outperformance, or decent performance from the yen today. Also, Treasury yields just a tick or so lower. Today as well is a bit of a quandary for the whole risk appetite game, but certainly at the moment equities are holding up fairly well. We've got the Fed meeting tonight, Fed meeting which is expected to not really do a great deal. The Fed has had an enormous amount of action in the emergency announcements it had through March, so it's pretty much needs to take stock, I think, a little bit. Also, you've got the GDP numbers for Q1 today for the States. So the bulk of the COVID-19 impact is not going to be seen through Q1. It's going to be more Q2. So the measures that the Fed has put in place may want to see how they begin to pan out. And there might be a nodding towards some sort of yield curve control potentially further down the line. That could have an impact today. But broadly speaking, not expecting a huge amount of action from the Fed. So we do have the we do have the growth numbers for the States, and they're expected to show a decline actually of 4% annualized in Q1. Now, as I said, the bulk of the negative impact of COVID-19 is going to be seen sort of into April and May, so it's going to be Q2 that gets the bulk of the impact. Pending home sales for March at 3 o'clock expected to decline 10%. Crude oil inventories expected to show another inventory build of 10.6 million barrels, and then obviously, as I said, there's the Fed tonight. Now, my chart of the day is the New Zealand dollar. Now, I've spoken previously about this risk recovery we've got going on. A couple of charts in a row that I did based on the Aussie. I did sterling Aussie and Aussie versus the US dollar. But sort of looking at the Kiwi, it's a little bit behind the Aussie in terms of recovery, but still the run of positive candles is going. You can say that yesterday's reaction actually into the close was pretty reasonable, considering it initially fell down, rebounded of 59.90 and closed back into this resistance, or has come back into this resistance band with 60.70 up to 61.30. 61.30 was that April high. So that's a band of resistance overhead, and bearing in mind that this is also 50% fib of the big sell-off, you can say that this is an important band here that the bulls need to break through. They've had a little go at the top today, just pulling back a little bit, actually hitting that fib level to pretty much to the pit before turning back. But you've got these positive indicators through the RSI now, moving through to the mid to high 50s. You've got MACD lines pulling higher again, as are stochastics. So it looks as though the market wants to have a go at breaking this consolidation. It's had a little bit of a pullback today. As I said, it's got the Fed tonight, this pair, which could have an impact on it. But you've got a nice band of support, 60.70 down to 60.40. These sort of breakouts, but actually essentially down towards the sort of 59.90, 60 big figure level is going to be important, because I think that is where we see ultimately the bit of a near-term pivot support. So you're going to see continued pressure, I think, to the upside unless you see the Federal Reserve doing something doing something unexpectedly hawkish today, and I don't think you're going to get that really. So essentially, we're still pulling higher, and risk appetite is positive, so that's decent for the Kiwi as well. So that seems to be that we are positioning for further Kiwi gains in due course. Now, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website where you can sign up for